Hello traders, the title of this video is Currency Trader talks about British pound US dollar trading tips. Currency Trader talks about British pound US dollar trading tips in 2017. Alright, let's get started. I'm on the yearly chart. And as you can see, we have a kind of ABCD chart pattern. Price went down. You see here. Okay, price went down from here to here, and then rally up here, and then coming down. So this is point A. Trying to put it there, but I don't know what's happening here. That's point A, point B, point C. At the point D, all right, D for delta right here. So we have a B, a C, a D chart pattern on the yearly chart. All right. Now, as you can see, if you look at this session here, the price was going down in this session, and last year, 2016, was very, very bearish for the British pound because of the threat of the independence of Scotland and also due to the Brexit. Now, we know that the United Kingdom will pull out of the Euro zone, and this is what we call the Brexit. So those are two elements, the threat of the independence of Scotland and the Brexit are creating a bearish sentiment towards the British pound US dollar currency pair. Now, as a technical trader, talking about trading tips, what can we talk about here? All right. So, one thing we need to understand before we continue is that the market wants to sell the British pound US dollar due to fundamental reasons. So, whenever you are applying your technical analysis, you don't want to forget that. All right. They want to sell it. But right now we have A, B, C, D chart pattern on the yearly chart. This year, 2017, will be critical for the British pound US dollar currency pair. As you can see here, we are the low, near the low of last year. So what I can say to traders, as long as the price is near the low of last year, near the 119.73, that's the low of last year. We want to look for bullish chart pattern, reversal pattern, near that low of 2016 at 119.73. So because we have A, B, C, D chart pattern being formed on the yearly chart, we want to concentrate on bullish chart pattern, reversal pattern near the low of 2016. However, if the price breaks below that low and find a resistance, we must give priority to bearish signal. So that level, the low of last year, if we are hanging around it, if we are not going away from it to the upside, well, below 119.73, priority to bearish signal, above 119.73, okay, not too far away, quite close to it. We are looking for bullish chart pattern, bullish reversal pattern. But remember that the market wants to sell the British pound US dollar due to fundamental reasons. So if you are buying the British pound US dollar, you need to be very, very gentle, all right? Carefully. Take it one step at a time. All right? I have not finished yet. Let's stay with me, please. Stay with me, please. All right. So we're going to go now to the... And one more thing I will say on the yearly chart is this. So if the price starts going down from the low of last year, we need to be aware of the median line of 2016. That median line is near the level of 134.79. That's the red line here, near the level of 134.79. So if it's finding support near the low and start going up, All right? Be aware that there is a resistance at 13479. All right? We can also divide the range between 13479 and the low of last year. That should be somewhere near this level of 12707. I'll come back to that level very shortly. All right. Talking about a currency trader talks about British pound US dollar trading tips. Let's go now to the monthly chart. On the monthly chart, you can see that the price is in a declining channel because I have my huge pitchfork tool here. All right. Which are divided in, you can see that the upper half of my pitchfork tool are divided into two, and one more time I divide it again into two. So the price confined in this declining channel right here. All right. So though the price is in a declining channel going down, we are near a support level. Which one? Near the low of last year. All right. Therefore, we can give priority to bullish signal above that low of last year, looking for bullish reversal pattern. All right. This is what we can see on the monthly chart. Price in a declining channel. All right. But at a support level. So if the price going down, the price looking for a better support level. Okay. Well, so let's go now to the weekly chart. On the weekly chart, the market patterns becomes clear to us now. I'm still waiting for my data now. What's going on? Is it my internet connection or is it the charting software? On the weekly chart, we have, I'm still waiting, okay. On the weekly chart, we have a consolidation. Here it is. You see that the price is oscillating, okay, between the level of 12707 and 12057. So, what is happening here? Professionals are looking for opportunity to sell near the level of 12707, and they will be prepared to take their first profit near the 12353, and if it breaks below 12353, they will find a resistance. They will sell it down to 12057. So, as I was explaining to traders in every trading video, is that the market pattern will determine the appropriate trading strategy that we must deploy. So, here we are not trending, we are consolidating, so we must deploy, okay, the appropriate consolidation trading strategy. So, as you can see on the weekly chart, recently the price went to the upper level of the consolidation at 12707. Professional implement, okay, the consolidation strategy, which means sell. Now, as the price going down, you can see that as it reaches the median line of that consolidation, they take their first profit. So now the price is hanging around the median line. So far, it's still bullish because if it starts changing direction near the median line, they will push it back to the upper side. So we may have a kind of smaller consolidation between the pink line and the orange line. But if it breaks below the orange line and find a resistance, boom, they will sell it. They will try to sell it. They will try to sell it, pushing it towards the 12057. So very, very important. Always ask yourself, what is the current market pattern? Check it out on a monthly chart and also on a weekly chart. If the price is in a declining channel, all right, but it reaches a very influential support level, do not ignore it, okay? If the price is also in a rising channel and reaches a very important resistance level, do not ignore that resistance level. Though it is bullish, it's in a rising channel, there is a resistance, the market will acknowledge it, all right? As you can see in the horizontal channel, people are looking for opportunity to sell on the upper side of the consolidation. But as the price is approaching a support level, which is the median line of the consolidation, a prudent market participant will take some profit and watch the reaction. All right? All right. So this is how you will trade. You want to know which strategy should apply. Are we in a rising channel? Are we in a declining channel? Are we in a horizontal channel? All right, and then you implement a top-down trading method, multiple time frame trading method to trade it around key levels. All right, so here we are now near the median line of that consolidation on the weekly chart. I know there is a correlation between the weekly chart and the 2-hour time frame. You see there is some reaction here near that median line. You can see that the price came, it hit it here for the first time. It will be nice for it to push it again back here for the second time to see whether we will see a bounce or not. That will be a bullish trading setup. If we see a bit of bounce here on the 2-hour time frame, then we will implement a top-down trading method to trade it for day trading or scalping purposes. All right, but if it breaks below it, all right, and retest it here one more time, we implement a top-down trading method to trade it. TSCW34 trader will go to the first best time frame looking for trading signal. All right, trade around key level. Know where are the key level, but the first thing that you want to know and make sure that you are not violating is what? The market pattern. All right, this is about currency trader talks about British pound, US dollar trading tips. All right, the same consolidation is also true. Let's go now to the daily chart. Is this a daily chart? Yes, it is. Looks different for me. All right, on the daily chart, you can see that it's just rolling it down, but the consolidation is still valid here because what is happening here? Why do we have the consolidation? Because the price is acknowledging the low of 2016. All right. So if it did below that low, we will measure the width of this smaller channel and we will project it in the direction of the price, applying what we call market geometry to pinpoint, the best reversal point, the key levels, all right? So by projecting the channel, we can identify, essential key level, all right? I'm just writing something for myself here. Bear with me, please. Okay. All right. 1 second, please. Okay. Now, so going back again to the monthly charts one more time. All I will say to traders is that priority to going far to the yearly chart. To bullish signal above the low of 2016, but we want it to be near that low because if it goes far away, you need to be a little bit careful. We want it to be very close to that low. We are looking for bullish reversal pattern. All right. You can look for candlestick pattern, reversal candlestick pattern. All right. Let's go to the monthly chart. Is anything there? It's just going horizontal. We haven't seen any reversal pattern. It's because of consolidation here. But the tail of this candlestick is telling that there is the support in this zone. All right. So this is the month of February. We'll see the reaction because the price hit the top of the consolidation. They are selling it down. All right. So at the end of February, it will become clear to us what's going to happen. Is he going to push it up or push it down? That will determine, what is likely to take place in the month of March. This candlestick bar here is so important for us in the month of February on the monthly chart. All right, so priority to bullish signal above that low and priority to bearish signal below it. All right, break below, retest and around, break above, retest and around. But as the price, if the price going up, be aware of the media line of 2016 at 13479. Before I forget, my friend, the level that I was mentioning to you, that pink line at the top of the consolidation, is in fact the first long-term equilibrium price level for the British pound US dollar currency pair. You do not want to forget that key level if you are trading the British pound US dollar in 2017. It's the first long-term equilibrium price level for the British pound US dollar at 127.07. Will you promise me that you will remember? Now, this to make you laugh a bit, okay? So don't forget that level throughout 2017. You need to note it down somewhere and know that it's a high impact key level. It's a very influential key level, the first long-term equilibrium price level. In fact, what I would say to traders at this point in time, those who are position trading or whatever, expecting the pound to go up. So once they settle what we call Article 50 to start the Brexit, okay, once is in place, the market will settle a little bit because there is a little bit of doubt, uncertainty regarding the British pound at the moment. So because of the Brexit and the threat of the independence of Scotland, and the government has to trigger the Article 50 before they may start the Brexit as such. Okay, so we may see this consolidation going on for a while before, if the dust has settled, so to speak. If you want to be truly bullish, it has to be above that level of 12707. Do not ignore also our pitchfork tool that I put on my chart here. Okay, 3 point, first point, second point, third point. All right. Don't forget the pitchfork tool, the price decline channel. But we are near that support level, very important for us. But if you want to be bullish, it has to furnish support above 12707 or display first higher low or double bottom, a bullish chart pattern or reversal pattern above that level. And if the market environment, okay, is more stable, all right, the sentiment has improved toward the British pound, we will see it galloping up, running fast. Okay. We will see, or that remains to be seen. So we will see how this year, 2017, will be for the pound. Too much blah 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 going on. So that's the first long-term equilibrium price level. For those who are day trading and swing trading, the current short-term equilibrium price level for the British pound, US dollar, which we shouldn't forget, up to the end of February 2017, is at 12353. 12353. You see? Can you see that? That's the orange line here. All right? If you are day trading, swing trading, you want to know where is the short-term equilibrium price. You see, just look at this candle. See by here. Just touch it. Pew! Say, hey. All right? It's just acknowledging, all right, the short-term breaks above it. All right? Then you say, okay, I know you are here. Boom. All right, the short-term equilibrium price level that we must watch up to the end of February is 12353. All right. Okay. So do not forget the low of 2016. Let's go back to that again one more time. 119. Oops, that's not the one. Last year is 11973. 11973. That low is so important for us. The first long-term equilibrium price level, 12707. The current short-term equilibrium price level, 12353. All right, the median line of 2016, 13479. Current market pattern is what? Consolidation. So that will determine, all right, the appropriate strategy that we must deploy. Consolidation taking place between 12707 and 12057. We are now on the median line, which is also the short-term equilibrium price level. All right, one step at a time, and in all cases, implement a top-down trading method to trade it like a pro. This is the end of this tutorial about Currency Trader talks about British pound, US dollar trading tips in 2017. Happy trading to you all, and speak to you soon.